Hi, this is Craig, and in this video I'm going to talk a little bit about shorting stocks. Now, the first thing you want to look for is you want to look to make sure the stock's in a downtrend. So the easiest way to do that is to look at your moving averages. Here we've got this blue line is the 10-period moving averages, and it's going down, and you got the 30-period moving average, which is going down, and even the 200 moving average is declining. Now, by all accounts, when you see those moving averages heading down like that, the stock's in a downtrend. So that's the first thing we need to look for when we're wanting to short stocks. Now, what we're going to be talking about is this area right here, right up in through here. Now, the first thing we want to look for is we want to look for a stock that has consecutive up days. So we've got 1, 2, 3, 4, about 3 to 5 up days in a row, and we want it to move into the trader's action zone. Now, for those of you who don't know, the trader's action zone is this area in between the 10-period moving average and the 30-period moving average. It's this sweet spot in through here. So once we see a stock with consecutive up days into the trader's action zone, we want to look to the left and make sure the stock's at a resistance area. And if you look over here, you can see all this congestion, these overlapping candles right here. That tells us that as soon as the stock runs up into this area, it's going to have problems breaking through this point right here. Now, we don't know that all of this is going to happen, but we do know that once this stock gets up into here, it's going to run into problems in this area. So we look at this area right here, we see that it has 1, 2, 3, 4 consecutive up days, and it has consecutive higher lows. This is important. You've got 1, 2, 3, you got these higher lows as the stock moves up. Now, what we want to do is we want to short the stock the first time it trades below the prior day's low. And you can see right here, this red candle is the first day that the stock trades below the prior day's low. And this is what forms our swing point high right up here. You got a high and then a higher high and then a lower high and a lower low. Now, this candle right here, if you were to look at a 60-minute chart, you would see that this stock has broken a trend line on this day. And that's another reason why we want to short it and why we want to look for stocks with consecutive higher lows. If you can see right here, this stock is moving up, and then on this day, this red candle, it breaks the trend line. And you can see it a lot easier if you look at the hourly chart. So on this day right here, this red candle is the day that we would short the stock, and we would put our stop loss order above the previous day's high, which would go right up above the 30-period moving average, above this candle right here. And then for our exit, all we would do is just trail our stops about 5 or 10 cents above the highs of these candles, and we would eventually have gotten stopped out. Probably on this day right here is when we would have gotten stopped out. So that's really it. You want to make sure the stock is in a downtrend, and you want to look for consecutive up days with consecutive higher lows, and just make sure the stock is at a resistance area, and short the stock as soon as it makes the swing point high and trades below the previous day's low and breaks this trend line right in through here. And that's it.